Welcome to Forkast IQ. As the world accelerates into the digital economy, we're going to help you stay ahead with the latest in Web3, crypto, and data. It's where we look beyond just the headlines to get you the insights and knowledge that will help power smarter decisions. Welcome to the show. I'm Forkast's editor-in-chief, Angie. It's always great to be here with you. Let's get started. All right, Asia was front and center on crypto rules and policies this week, and perhaps a flex post the FTX disaster. It's all about investor protection. Starting with Singapore, still stinging perhaps after its sovereign wealth investment vehicle Temasek lost more than $250 million of taxpayer dollars in its FTX investment. Well, on Monday, the city-state central bank said crypto service providers will have to segregate customer assets from their own and hold them in trust. In a statement, the Monetary Authority of Singapore, or MAS, said doing so will reduce the risk of loss or misuse of customer assets. The MAS added that it will also help in the recovery of customer funds in the case of a crypto service provider becoming insolvent. Yeah. Sounds familiar, right? FTX. Crypto firms have until the end of the year, it says, to put all of these measures into place. Now, the Lion City Central Bank will also restrict crypto firms from facilitating lending or staking of their retail customers' crypto. Remember, staking involves locking in one's crypto assets for a specific period to earn rewards. Well, that's no more in Singapore. The MAS also indicated that it's still assessing the issue. However, Pei-Ying Chua of law firm Linklaters told Forkast that robust investor protection is clearly non-negotiable to the Monetary Authority of Singapore, and this can help restore stability and trust for the crypto industry for the nation. She added that while the MAS policy stance is clear and unlikely to change soon, they are willing to monitor developments and may revisit their position if appropriate in due course. Of course, navigating the space in the regulatory realm is definitely something they want to keep an eye on, especially on Hong Kong. Meanwhile, Singapore's neighbor, Thailand, is also bearing down on crypto staking. The country's Securities and Exchange Commission has banned crypto exchanges in the country from offering both lending and staking services. It said that this move is going to protect investors from the risks of cryptocurrencies. The Thai SEC also requires crypto exchanges and brokers to share a mandatory warning about crypto risks, which must clearly be visible to customers. Kind of like that, smoking is bad for you label. The new rules will come into effect starting July 31st. But wait, there's more. Over in South Korea, legislators are also making regulatory moves towards crypto investor protection. The country's National Assembly approved a bill which in English translates as the Virtual Asset User Protection Act. Now, the bill is being seen as the first step to building a legal framework within the country devoted to digital assets. This is the same country that got decimated by the Terra Luna crash. It requires crypto service providers to ring-fence users' assets and deposits, to have insurance, and to hold a portion of reserves in offline cold wallets. Now, in case of hacks or system failures, among other provisions, they've got this all under the legislation. The legislation also gives the Bank of Korea the right to request data from cryptocurrency platforms, a right that it had been arguing for with the country's financial regulators. The legislation is expected to come into law in a year's time and has received a thumbs up from industry players.
이번 법 통과를 계기로 상당한 수준의 규제, 제도의 불확실성을 걷어내므로 인해 가지고 사업자들이 예측 가능한 회사 운영을 할 수 있는 점 등이 있어서 가상자산 거래소를 비롯한 사업자들은 대체적으로 법 통과를 환영하고 있습니다.
Meanwhile, in other parts of the world, read the US of A, trying to figure out the mess triggered by the crypto meltdown. We're talking about Cameron Winklevoss here, co-founder of crypto exchange Gemini, one of the twins, tweeted a final offer worth $1.5 billion in debt restructuring talks with bankrupt digital assets firm Genesis Trading. In an open letter to Barry Silbert, founder of digital currency group DCG, which owns Genesis. Winklevoss gave them until July 6th, 4 p.m. Eastern Time, to decide on the offer. Now, Genesis and Gemini have been negotiating for months to settle claims of Gemini earned customers, which lent funds to Silbert's firm. Winklevoss also invited Silbert to a Twitter space to discuss his offer without lawyers or advisors. Read really expensive, both of which have cost Winklevoss over $100 million in fees since the dispute emerged. A virtual handshake deal without lawyer fees in the works? Let's see. All right, time for a quick break before we talk about Hong Kong's new Web3 task force when we come back. Stay with us.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. We go to where the action is, from Asia to the world. Forkast is the most reliable source of intellectual discourse and insight that informs, educates, and bridges the gap between the blockchain industry and the mainstream. The future is being built, and Forkast has it covered. This is Forkast.News.
Welcome back to Forkast IQ. I'm your host, Angie Lau, Editor-in-Chief, Forkast. All right, Hong Kong, it's marching to the beat of its own drum, marching ahead with its Web3 dreams. China's Special Administrative Region formed a task force here comprising of 15 industry participants and 11 key government officials to oversee the development of Web3 in the city. In a statement, Financial Secretary and Chairman of the task force, Paul Chan, said, Hong Kong seeks to lead and drive innovative exploration and development, create more application models, and strives to draw together top-notch companies and talent in the arena to build a thriving ecosystem. Now, we got to speak to one of the members of the task force. Yatsu of Animoca Brands came on Forkast telling us that the development will continue the growth of Web3 industry in the city.
This is perhaps, exciting not only because it's a government initiative, but it just sort of demonstrates how Hong Kong is very serious about pushing the Web3 agenda. Actually, I also think it sort of shows the rest of the world how you can sort of integrate that type of cross, government/business collaboration.
So what exactly is Web3? Well, let's dive into it. It's an all-encompassing term, as we know. Some call it the next iteration of the internet, technology that will turn the world as we know it on its head. Well, tech investor and best-selling author Alex Tapscott joins us to talk about how Web3 is impacting business, culture, and society while helping people break geographical and economic barriers. He's launching his new book, Web3, Charting the Internet's Next Economic and Cultural Frontier. It's being published by HarperCollins now, and I'm excited to preview it here with Alex for all of you on the show right now. All right, different technologies are converging to shape our world. We've got artificial intelligence. It's accelerating faster than we can imagine. But what makes blockchain stand out amidst different technologies here?
This is a very exciting time in human history. We're at this moment where technology is reimagining everything that we thought possible. The rise of generative AI is changing how we think about human intelligence. But there's one technology in particular that it might surprise you to learn, I think is going to have a bigger impact than any others. And that is the technology behind cryptocurrencies, and it's called blockchain.
Alex, in your book, you say Web3 success does not depend on converting everything that's on Web2 to Web3. So why is that?
I don't think Web3 is replacing Web2. I think it's additive to Web2, in the same way that Web2 is additive to Web1. But I think that there will be new kinds of applications that, if not displace, then disrupt or weaken the position of a lot of Web2 companies. The Web3 social media project of the future could be a token-gated community where with special user benefits, where there's maybe a native token that community members earn by participating in the social graph and doing fun things.
And what bright spots are you seeing in Web3 development?
One of the most fascinating areas of Web3 development today is in gaming. And having a digital bearer asset, something you could actually own and custody yourself and control how it gets used and where you send it and how you monetize it, that's a really powerful force. And so we're seeing that being introduced in the gameplay. To me, what I love about that is that it's almost like a stepping stone, because you're dealing with internet users who already have experience spending money on assets.
Okay, I want to talk about institutional interest in digital assets. Since BlackRock filed for a spot Bitcoin ETF, we're seeing more institutions eyeing up crypto. And we've seen that really increasing over the past couple of months, but the past couple of years for sure. What impact do you expect on the biggest digital currencies as a result? We're talking about Bitcoin and ETH.
What's more interesting to me than will BlackRock launch an ETF? Look at all the big Fortune 100 companies and other large organizations that are using Web3 technology and integrating tokens into their business processes. So, whether it's LVMH or Nike, or whether it's Sega, or whether it's PepsiCo or Starbucks, or any of these other firms, all of these companies are embracing Web3 in a really material way. And I think that more than anything else is what's going to drive long-term growth. Because ultimately, if a big enterprise is using, is offering some program for, let's say, NFTs in Nike's case, or in Starbucks' case, it's loyalty program. Well, those are going to have to run on some public network, and whether it's Polygon or Ethereum, it means that there's going to be demand for block space and demand for network capacity.
Alex, thanks so much for joining in today. It's great to see you, and all the best for your new book, Web3, Charting the Internet's New Economic and Cultural Frontier. It's out September 19th. All right, I'm on the list. Okay, on that note, let's take a quick break, and we're going to talk about tokens, digital fashion, and what the NFT markets were up to this week on the other side. Stay with us.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. The future is being built, and Forkast has it covered. This is Forkast.News.
Welcome back to Forkast IQ. Are you ready to take a fashion foot forward here? We're going luxe in the metaverse. Prada's time capsule NFT drop, or Gucci's cute Super Gucci's, or even a Vivienne Tam fashion show that brings Hong Kong in the metaverse to the New York Fashion Week. It's all possible in Web3. Forkast Maha Shah takes a deeper look into all the possibilities the digital world presents for fashion.
Web3 is in vogue. From Prada NFT drops to Dolce & Gabbana fashion shows in the Metaverse, a growing number of fashion brands are embracing blockchain technology. No longer constrained by traditional runways, fabrics, or geographical boundaries, digital fashion is transforming how we experience style.
It's an extremely democratic and creative environment where users can, as I said, take on Gucci and Prada and put that up with an up-and-coming designer coming from New York or London, put sneakers with it, and really go to town in terms of their manifestation and creation.
Luxury brands such as Prada are leading the charge with NFTs, targeting their tech-savvy clientele. Gucci also partnered with board app creator Yehudah Labs for a Metaverse project.
Luxury brands normally behind the curve. They jumped on top of the NFT piece because they're very excited again about the monetization around that. And why it was fantastic is it really got the luxury and brand owners up the learning curve in terms of digital, and they start to understand what digital rights and digital ownership means. Where it is challenging is it's slightly ahead of the consumer curve.
According to a report, the global market for digital fashion is expected to grow to $4.8 billion by 2031. COVID-19 pandemic sped up the shift to online shopping, which is expected to reach $8.1 trillion by 2026.
So when we're talking about the metaverse, and then we're walking around this metaverse with our avatar that we look at as our digital identity, of course, we'll be spending big bucks on rare clothing and clothing from these brands that we all care about. There's millions of people who care about these luxury brands like Prada and Gucci, and in my opinion, there should be no debate. Their luxury assets will be coveted. Let's also mention the importance of something like Apple's Vision Pro that will lead us to a future where we're wearing some of these digital clothes on ourselves through mixed reality.
Artificial intelligence, or AI, is also helping streamline fashion content and production cycle.
Our content supply chain is our king, it's our fuel. So the content that comes through, the fashion, the accessories, the makeup, the hairstyles, all of that is really what players love to create with and also what we monetize on.
Gaming is also emerging as a catalyst to introduce people and communities to the world of digital fashion. Sports footwear giant Nike recently partnered with Fortnite to launch Euphoria, a cosmetic in-game item that players can use to customize their avatar.
Big brands feel right at home in video games, and it lets them stay connected to their customers even when they're not outside flexing their fit. We've seen Gucci, Vans, Nike, Ralph Lauren, all with a footprint in that ecosystem. Maybe not all as wearables yet, but it feels like that's coming.
As technology continues to revolutionize the fashion industry, new revenue streams emerge via smart contracts that allow designers to establish royalty splits and ensure continuous compensation for their work. Traditional fashion industry has had a significant carbon footprint, but could blockchain be the answer to make this industry more sustainable? The Aura Blockchain Consortium, backed by top brands like Prada, Cartier, Louis Vuitton, is certainly trying. They're using digital product passports backed by blockchain technology to track the life cycle of their merchandise. There are, however, some challenges to mass adoption of digital fashion. The road to Web3, as it exists right now, is paved with digital wallets, NFT mints, and seed phrases. It's technology that's not intuitive, and brands that want to be successful in digital fashion will need to invest in engaging and accessible user experiences. Digital fashion can also raise legal and ethical concerns about NFTs, ownership, and copyrights. A New York judge banned artist Mason Rothschild earlier this year. Rothschild was selling Meta Birkin NFTs, which was ruled as an infringement of the trademark rights of Hermes' iconic Birkin bags. But there are those who believe in the potential of the industry.
As an entity, we are a fairly prolific investor in the Web3 space. We have done investments in BNB, Altava, Superplastic, another UNXT, and a whole bunch of other companies that basically all provide sort of avenues in which you can do virtual fashion in the metaverse.
Fashion is constantly evolving and shaping culture, and as brands continue to experiment with cutting-edge technology, we will see new avenues for creative expression. Maha Shah, Forkast.News.
All right, let's step away from fashion right now. There were a lot of project-specific developments in the world of NFTs this week. Forkast Labs data analyst Yehudah Petscher is here with all the details. Good to see you, Yehudah. What's the down low from NFT land?
Yeah, great to see you again. Well, it has been a very, very rough week for NFTs. After seeming to find a break in those free-falling prices, well, a poorly executed mint from one of NFT's most popular projects called Azuki, it sent the markets into a bit of a free fall again. Let's take a look at the Forkast 500 NFT index, and as you can see, the Azuki Elementals mint on June 27th, well, it led to a major sell-off across the NFT market, though you can see it has tried to bounce back from these recent all-time lows. So I want to set the stage for you for what happened with this mint. Azuki Elementals is the Azuki team's second new collection since January 2022 when they launched their debut NFT collection. That collection at its high point last year, by the way, reached 32 ETH, which at the time was $110,000. Since then, that collection has remained one of the most expensive NFTs across any blockchain, and they've performed really well in this bear market. Well, when you have a hyped mint like this Azuki collection, it's usually followed by a very active secondary market. And when that happens, when you have that active secondary market, that puts liquidity into traders' hands who then typically go shopping. That did not materialize this time. Instead, with the Azuki Elementals mint, it was really only the Azuki team that gained that liquidity, and they actually made $37 million from this mint. So the first problem here was the Azuki Elemental collection was sold almost entirely to existing Azuki holders. They left out, for the most part, their secondary collection called Beans, and the public was entirely shut out of this mint. And then came the art reveal, and this is what really caused the panic in the market. When the art was revealed, collectors were met with artwork that looked nearly identical to the existing, that first Azuki collection, and it felt like it essentially devalued that first collection. And given that the market as a whole was already down pretty significantly, and that these Azuki NFTs did hold some value, 10 ETH plus, well, they began to sell them while they still had value. That Azuki floor price started tumbling. It is down 67% in the past 30 days. 58% of that is coming just in the past week here. And that same sell-off, it extended to their other collections. I'm talking about the Beans NFTs, which are down 76% in 30 days. 69% of that is in the past 7 days. The new Azuki Elementals collection that minted for 2 ETH, that's currently trading for around 0.8 ETH. It's down around 75% from its mint price. Have a look over at Yuga Labs NFTs, which are struggling as well. Even with the launch of their new video game called The Forge, Yuga Labs collections, which includes Bored Ape and Mutant Apes and other deeds, they're all down significantly too. Bored Apes in particular, and I mention them because they are the most significant NFT out there. They're world famous, right? But those are down 38% in the past 30 days. 23% of that is just in the past 7. And then if we hop over to Solana, a project called Solana Monkey Business ran a head-turning raffle with NFT tickets where buyers would be refunded if they didn't win. The tally at the end of the raffle, it showed that over 50,000 NFT tickets were sold, and that's prior to refunds being given out, by the way. But the SMB barrel raffle collected over $29 million. It's a huge number. And again, I just want to point out the huge asterisk here is there's only 4,000 winners of this raffle. So a majority of that money is being refunded. But again, I'm pointing it out because there is something significant here. First, it's just an incredibly fair way to do whitelists or do reservations. But for me, the real takeaway here is that, like Azuki's Elementals mint being the highest single day of sales over on Ethereum, well, Solana Monkey Business's barrel raffle tickets, that was the highest day of sales on Solana this year. And we'll also zoom out there too. Like Elementals, it was the highest day of sales since May 2022. What this tells me is that there are many NFT investors who are here, they are active, and they are watching for opportunities. There's also another major project, a top 50 project called Cyberkongs, who have a major mint coming this month as well. All of these things combined will tell us a lot about the current state of the NFT market. So I'll see you next week with that.
All right, thanks, Yehudah. Always good to have you. All right, everyone, let's turn our sights now on a blockchain that is getting a lot of attention for, well, not getting a lot of attention. Among the most popular blockchains for NFTs, there's one that's being dubbed a ghost chain. We're talking about Cardano here. But supporters of the chain disagree. So what's keeping the Cardano NFT ecosystem afloat? Forkast's Sultan Vardai finds out.
There were 13,500 unique NFT buyers during the month of June on the Cardano blockchain, which was more than 10% lower than those in May. That's a giant drop compared to the peak of over 250,000 buyers on the chain in October 2021, according to data by CryptoSlam, an arm of Forkast Labs. The Forkast Cardano NFT Composite, which measures the investment performance of NFT traders in some of the top collections on Cardano, shows a drop of almost 4% through the month of June. But Forkast Labs data suggests that traders on the so-called ghost chain suffered significantly fewer losses than those on some of the world's top NFT networks, such as Ethereum, Solana, and Polygon. Cardano's native cryptocurrency, ADA, is the world's 8th largest cryptocurrency by market capitalization, with around $10 billion worth in circulation. Despite it being the 6th largest blockchain for NFTs by all-time trading volume, with almost $600 million in sales, the network's NFT ecosystem has, in numerous occasions, been declared dead by social media users. But Musa Zaidi of NFT Hive Club told Forkast he wouldn't dismiss Cardano from the top NFT blockchains. He said, "There are still some die-hard Cardano supporters and projects out there that back the chain, and as past crypto portfolios show, a single market bull run can be a game changer." Despite the falling number of buyers, new NFT collections continue to launch on Cardano. Last month, Australia-based digital artist Joel Moore, better known as Moga, released the Mogakongs NFT collection on the chain, a collection of 5,555 girly NFTs that sold out within 48 hours of launch. According to Moore, choosing Cardano to house his digital art was an easy decision. He told Forkast, Cardano is a blockchain with a good future, community, and ecosystem. While most top Cardano NFT projects remain engaged with their community, a few notable ones have been inactive on social media. According to Andy Leon, author of the book NFT From Zero to Hero, Cardano's forte is offering a user-friendly experience for NFT creators and traders. Leon said, "The platform offers low-cost transaction fees, making it an attractive option for enthusiasts seeking cost-effective and scalable solutions." Count Stacula, a pseudonymous Spacebots NFT holder, said that Cardano developers keep building despite the market conditions. In Discord message to Forkast, he said, "There was some more hype felt around the Cardano NFT scene when smart contracts were still to be announced, but it's an overall healthy NFT ecosystem. Will the Cardano blockchain turn its fate with NFTs? We'll be keeping watch." Zoltán Vardai, Forkast.
Well, that's a wrap on this week's show, and thank you, as usual, for tuning in. I hoped you learned a lot, and it was always great to be here with you. Remember to like and subscribe to this video if you're watching us online. It's super helpful. Or stay tuned right here on this channel if you're watching from home. It's easy to stay connected with Forkast for the latest developments in the world of crypto and Web3. I'm Forkast Editor-in-Chief and your host, Angie Lau. Join us again this time next week as we bring you the latest from the world of Web3 and why it all matters. Forkast IQ, get intelligent in Web3.